Well, I think by now it's become common knowledge that the consumer is doing great. And you see that in the retail numbers. You see that when companies like Simon Property, which I've been riding all year and talking about probably too much, tell you what's going on with foot traffic, et cetera. So, like, I don't feel like that is really moving markets anymore. I think that's become generally accepted for a long time. I think the problem that we're running into now is that we're seeing companies report incredible numbers and the stocks not react or sell off even. And I think a lot of the reason for that is because of how widely known this phenomenon is. And look at the gains in the big consumer discretionary stocks. So it's not happening across the board. Home Depot had a great number and reacted well, but Target is a good example. Target's down 4.5% after earnings. Earnings were amazing. The problem is Target ran up 50% from the last time they reported into this report. So, like, how much room is left? Walmart is another great example. The stock does not trade well. Meanwhile, they just told you comparable sales were up 9.2%. So a lot of these names have had big runs. It's not universal across all of them. Costco is on a truly insane run. It was 246 early in the year. Now it's almost 400. So it's tough to know which of these stocks have the great news priced in and which have more room after the great news. And this is very relevant because I'm in a name, NVIDIA, which has had one of the biggest short-term runs I've ever seen, and the numbers are tonight. And I don't know if there's enough room, even if they have a great report, for this stock to go much higher. So I guess we're going to have to find out.
Yeah, the market will tell you what's priced to perfection. But to your point, consumer discretionary, the best performing S&P sector.